Hi, it's Paul Sargent here from Transform Finance. I'm joined by Aoife Doyle, the VP of Product Marketing at Fenergo. And thank you so much for joining this morning's webinar. We're going to be looking at how bridging the KYC technology gap and how financial institutions can efficiently combat financial crime. Many of you would have attended some of our previous webinars and events, so thanks so much for joining this morning. We're going to be having a presentation and then jumping into our panel discussion and group discussion. You'll see on the right hand side there's a chat bar there, so please do post any questions or comments for Aoife and our other panelists. We're going to be joined by the Chief Risk and Compliance Officer at Impay, the Chief Compliance Officer at Banca International Luxembourg, and the Director of AFC Transformation at PwC Italy. But yeah, I'd like to introduce Aoife Doyle, VP of Product Marketing at Fenergo. She's based in Dublin. Aoife has over 12 years experience in the financial services industry, previously at Central Bank of Ireland, Citibank, and has a strong background in compliance and consultancy, particularly in the areas of anti-money laundering and digital transformation. So yes, without further ado, I'll hand over to Aoife and enjoy the webinar, and please do post your questions, and many thanks. See you soon.
Thank you, Paul, and good morning, everyone. Thank you for joining us for what I think will be a very interesting discussion with the panelists that we have lined up today. Before we step over to our panel, I just wanted to step through some of the research that we have conducted recently at Fenergo and some of the findings that have led us to be here today to discuss maybe some options around bridging some of the gaps that we've identified across KYC and compliance throughout the onboarding and maintenance process of an entity. If we go way back into the 1970s and the enactment of the US Banking Secrecy Act, laws and regulations to fight money laundering and financial crime around the world have become ever more compliant. And understanding the identity of customers and where they sit and what they are doing with their business when they come to you has been an essential banking requirement now for more than 50 years. In that time, the volume and the nature of data that compliance officers and institutions need to look at has grown substantially, and indeed has grown across multiple jurisdictions. It is quite rare that we can come to a global policy for an onboarding from a KYC perspective. Therefore, we are looking at multiple jurisdictional requirements when the client is enacting business across multiple locations. It's particularly pertinent for KYC compliance, which is a critical part of the client lifecycle, when you're maintaining the client relationships and you're trying to generate revenue on a timely basis. The KYC process has, for some time now, been something that has been a struggle for financial institutions as they attempt to modernize their KYC processes and modernize the disparate systems and fragmented architecture that those KYC processes are supported by. This fragmented positioning and the fragmented architecture that institutions have in front of them is resulting in an over-reliance on manual efforts, which in turn is leading to high costs being felt throughout the industry. It is being felt on the number of available staff to go through and manage the processes. And also there is potential for increased risk or increased risk management challenges. And underlying all of that would be a negative client experience owing maybe to that increased time to onboard. Fenergo recently conducted a survey of over 1,000 chief operations officers, compliance officers, and risk officers across global corporate banks to find out a little of the state of the KYC landscape in 2022. Our findings showed that the KYC process continues to be a costly, laborious, and predominantly manual process, which still remains a high amount of human intervention. We found that 65% of the firms surveyed spent up to 35 million on KYC reviews per year. And those same institutions were employing between 1,500 and 2,500 full-time employees for KYC. For the scale of the institutions surveyed, a very high percentage both on spend and on the number of employees. When we looked through it, we found that the time spent on the KYC reviews, 30% of firms are spending between 120 and 180 days working through a KYC review cycle. Obviously, there is variances there between risk profiles, between complexities of clients, but those figures, you'll all agree, I think, are quite high. We continued the research to look at what impact that had on the success for the firm, and over 90% of surveyed institutions found that the laborious KYC effort impacts the firm's decision to make risk decisions, and that 35% felt that addressing KYC backlogs that have built up over time for reviews is the biggest challenge facing their compliance department. Interestingly, what we have found from previous years when similar surveys have been run is that the KYC budget priorities are beginning to change and are beginning to turn around. We've seen that 62% of KYC budget priorities have been allocated for technology to bring more automation and more technical processes through what is currently the manual KYC process, compared to only 38% who are budgeting for additional headcount in their spaces. When we look to it and double clicked a little on the tech investment priorities that are being felt through those budgets, you'll see from the stats that are presented here, quite a high amount is being earmarked for financial crime and regulatory risk to really ensure that when these risks are being calculated, that they are being calculated in a robust manner, they're being calculated in an automated manner, and the data that is available to institutions is being used in a timely and correct manner in order to calculate risk on an ongoing basis when it needs to be calculated. Looking through and moving into what I think is being coined as the perpetual KYC challenge, and perpetual KYC as a concept is not necessarily anything new. It has been discussed at many webinars, conferences, seminars for quite some time now. But if we looked at what is the challenge that would lead institutions to consider this concept of continually reviewing a client's profile, what is leading institutions to that piece? Institutions surveyed calculated that they are working on between 2,000 and 4,000 trigger events per month. Trigger events being defined as a change in data, a screening hit, a change in the service that the entity wanted to avail of from the institution. And of those trigger events, when they are looking to a requirement to review the KYC profile for the client, 41% are still carrying out those KYC review tasks on a manual basis. So I think we would see where you're going to have quite a few backlogs building if you're looking at that scale of trigger events on a manual basis alongside your regular periodic scheduled reviews for your clients. Then when we further looked to it, to have some considerations as to the architecture or landscape that institutions are looking to, 50% of financial institutions surveyed have not fully integrated their KYC and transaction monitoring solution to be able to have an ongoing monitoring scenario of client behavior. So 50% of those institutions, their KYC platform is not integrated and is separate to their transaction monitoring platform, in turn increasing those trigger events when you're looking to the scale of transactions experienced by most institutions. If we were, and maybe across our conversation when our panelists are introduced, if we were to consider what does a perpetual KYC model look like? What could a perpetual KYC model be in an institution where technology has been embraced and they have gone through the journey to implement such model? What we see in this diagram is a representation and an acceptance that not all KYC changes or not all KYC events that are processed for a client can be automated. So what we see on the far left of our screens is all of the different KYC events, those screening events, data changes, suspicious transactions that have been flagged. They go into an event assessment engine, and that event assessment engine is looking to the materiality of the change that has been processed. So if we make a simple example, the event assessment has seen that my corporate entity has changed its headquarters but remained within the same city and within the same country. The risk assessment and the event assessment has determined that there is no risk impact to this change, and we go through our green route whereby the updated record is automatically processed and we've got the audit trail and full traceability of the change that is made. If we flip the example a little and we say that the risk impact of the change is that the entity has re-headquartered and has moved to a new country, that could have a material risk impact. The risk profile of that client could change depending on the country change that it has. At minimum, it will need to be repapered to take its new registration form. Therefore, that particular case, in terms of a perpetual KYC model, would require analyst intervention. Indeed, if the risk impact is so thorough that the risk now is high risk for that entity, enhanced due diligence may apply, but you would still go through a more manual process. Now, you're still using a system which has automated sourced the event for you, told you that it is a material piece. So a lot of the chain that would come behind the real work of the first line of defense has already been automated, but you would still be looking through it. We'll continue to discuss this a little more in our panel, and I will move at this point to introduce our panelists. So I will end our presentation and I will ask for the panelists maybe to join back. I am very pleased to introduce, as James mentioned, Ralph Ebert, Chief Compliance Officer at BIL in Luxembourg, Gianluca Signore at PwC, acting as the Director of Anti-Financial Crime Transformation, and finally Camilla Witt, the Chief Risk and Compliance Officer at InPay. Before maybe we get into the depth of our discussion today, I might just ask our panelists to maybe introduce themselves and say a few words as to how their organization is looking to some of the KYC technology trends. Ralph, perhaps you might kick us off?
Yeah, I'm always the weird guy because I'm living in Switzerland, so I'm representing the Swiss Wealth Management branch. But in particular for us, KYC is an enormous and very important element. I'm 25 years in the business, and digital transformation is always for me a part of the next generation opportunity to create compliance in a new way. And we pursue in the moment not only what I think everybody does in the financial world, is so-called KYC review and remediation model. At the same time, we're introducing a client lifecycle management tool, I think, which exactly should fit to all the principles that you have raised in your introduction. And I'm more than happy to share with the panelists a little bit about the findings, the issues, the topics, the difficulties to do it. So I'm more than happy to be here.
Okay, and Gianluca?
Hello, everybody. Thank you, Aoife. So I'm Gianluca Signore, Director in Anti-Financial Crime Transformation here in Italy. Actually, as Ralph said, that's KYC is pretty an hot topic for us as a consultancy company. And what we see on the market is the fact that the real question that our clients have, it's actually, how can I improve my KYC, both from a regulatory standpoint, but also from an efficiency standpoint, which is actually what is the topic for today. So probably we'll go through this concept more in depth in the discussion today.
Great. And finally, Camilla.
Hi, I'm Camilla Vicente-Witt. I'm Chief Risk and Compliance Officer at InPay. And I believe the biggest challenge that we have is InPay is the fastest growing company in Denmark, and we need technology that can support scalability. And in order to do that, we need to have a very good grasp in our data architecture and data governance when it comes to KYC, right? We need very clearly defined roles and responsibilities and what to do in case there is a data discrepancy and who owns the data. So I think that this is where our endeavors are going towards right now.
Wonderful. So to get us started maybe today, let's describe where we feel the KYC environment is at the moment? I know our research would certainly describe a scenario that would allude to still quite manual processes, people-driven process, quite labour-intensive. I know in your respective organisations, different steps would be taken, and some of you are quite advanced on moving away from this. But why would you feel that we're still in this manual, people-driven process in today's world, which gets more digital, I think, with each passing year? Ralph, maybe I'll ask you to opine firstly on that. I think we're just having a little problem with sound, Ralph.
Sorry, I'm
There we
back
go.
now.
Thank you. No problem. It wouldn't be a
Somebody
remote
could
session
lip
unless
reading, that
we
would be
were
even better.
on mute.
No, I think it's a very good question. I think it's historically related because our profession as well as compliance officer was always like that, meaning gathering data together, information together, make an analysis, and then bring it on paper. And so I think when especially you're taking it up now, you're having a lot of paper tigers sitting either on your offices or in the storage, which both is not good. So it's a complete transformation as well in terms of how we are functioning and how we evolve. Of course, especially in private banks, you can imagine the digital transformation is always an issue with regard, especially in Switzerland, banking secrecy, what can you do, etc. However, I think as we all users of apps, iPhones, Samsung, I don't want to name all the brands, we get accustomed to that digital data is more reliable than what we create in our manual world. And I think we all have then started to think over how can we do this? And I think we will certainly touch a little bit later upon that. But the real crucial thing, and I think Camilla made that already, that statement is, if you do not know where your data sits, you can have the best processes in town, you can buy the best tools that are on the market, especially from your company, but it will not help you to get over it. So just already as a first principle approach, I think digitalization is not a remediation to all your problems that you have in compliance. I think that's very important.
Mm-hmm. And Camilla, would you have some thoughts on that from what you would see in your industry?
Yeah. So regarding, the question of why do we still see a lot of manual processes? I mean, I think that historically, when KYC was done at the branch, right? You're going to open an account, you're going to sit with your advisor at the branch, bring your documents, and so on. And that's how it started. And of course, we're going away from that, but you still have a bit of that legacy that, you need someone to check things. On the other hand, I think that we also have a lot of difference in the framework presented by different countries regarding the access to KYC data. So for instance, in the Nordics, most of the countries have like a people's register that is validated by the government. So if I am a fintech, I can have an API that gathers that data that is validated. So it's way easier and cheaper for me instead of asking someone to scan their passport, scan, their identity and so on, and someone to have to check that. But it's not all countries that have this. So sometimes when you're trying to have uniform processes, you end up needing to have a lot of exemptions because we see different stages of digitalization in different countries.
And Gianluca, I think you would be well placed maybe to say, with the clients that you were working from, I think we're seeing here quite quickly that data management and a solid data management and data governance framework is emerging as really the backbone of a robust digital KYC program. But what would you feel needs to happen from a data point of view to improve processes? What would you see with your clients they're doing in order to better source data, better manage data, better master data in some scenarios?
I mean, that's a very good question. Thank you very much for that. Let me say, generally speaking, the data governance program are lacking behind in terms of, looking just at one focus on AFC. More in general, what I see is probably that in the past, several data governance programs started on other areas or more generic one. And on AFC, probably we are a little bit behind this. So what I see from let's say our perspective is that AFC officers are looking into it because, as Ralph said, you can have the best, the tier one solution, technology solution, the best in class professional, but at the end of the day, if data are wrong one, you can do anything. So So what I see is the fact that our clients are looking into it. Usually those are perceived at first glance as AFC related projects, even though they are more first line related projects. And the other point that I see is the fact that it's also a cultural matter, because I mean, looking at the AFC problem, you need, and in particular the data governance problem, you need also the time to get benefit.
Mm-hmm.
And therefore, what I see is the fact that several clients are very risk adverse towards AFC, and therefore management don't want to wait. Therefore, what is happening is that managers are getting calmer. Regulators are a little bit pushed by some financial institution to get structural remediation, and data quality is envisaged as potentially as one of these structural remediation action. On the other side, for sure, data providers, external data provider mentioned by Camila, or golden sources, as you want to call them, it's actually something that market is looking for. I don't want to say that we don't know, at least from my perspective, we don't have yet a very golden source, but for sure we can have data sharing processes, which might be put in place at group level.
And I think interesting when you touched on some of the structural remediations, a lot of the changes that you would see from organizations, they're not only changes to kind of their KYC program, it will touch the organization front to back. There's a huge remediation in order to bring the book of legacy data, legacy clients up to the standard of what your new one would be if you were looking to maybe tooling to support in this place. But if we look to the regulatory challenge, is there any comments we'd like to bring forward about what we feel are some of the more unique challenges that are being faced in Europe? And maybe we'll continue with the piece. I'll open to Ralph for this particular one. Maybe some of the challenges you would see in your organization.
I guess it's twofold. Number one, it's the regulatory landscape is evolving as never before. We saw over the last 5 years a tremendous tsunami of regulations happening in all elements of AML, cross-border, FATCA. The Russian-Ukraine conflict has as well contributed to a sanction element that has been never seen before. So there is an expectation out there, whether with authorities and the regulators, that whatever is out there is already transposed in internal processes and controlled. And honestly, being here, we apply Chatham House rules. It's far from being the reality. But even the regulators, and we see that, for instance, with the FIUs, they are switching as well to electronic data systems, meaning they do not ask you anymore to submit paper. We are there where we're in the first question, but raw data. And then it becomes very tricky, because when you get raw data out, they have sometimes even better sources and tools in order of investigating on them than you have. I've been confronted when I was working at Credit Suisse in the US program. I can tell you, it's not funny sitting in front of these US authorities when they have your data and are convinced that you do not see the holistic part of it. So there is a regulatory expectation which is clearly out, and I suppose even from a regulatory point of view, there will be more and more coming up in that regard. What I see as well, there's a lot of technology already out there, for instance, for blockchain, which we always get into the crypto and blockchain world as end user, but we have in Switzerland, for instance, as well, a very successful help for sharing KYC between custodian banks and external asset manager, which is run on a blockchain, fully blockchain available element. And I think that is before there's a regulation out there. And last but not least, we have to admit that some jurisdictions are quite advanced when it comes to data management, automation, etc., especially in Switzerland, where really we see as well the quantity of FIUs on the market is hilarious. Whereas in other countries, that is only in the beginning. So I look in the US, for instance, and that as well has a tremendous impact in terms of where and how you can use it.
I think we could certainly say that the pace of regulatory change that we have seen in the last couple of years, particularly as we've emerged from COVID, and as you had mentioned, the sanctions position that has arisen because of the Russia-Ukraine conflict has definitely led to an element of fatigue within the industry. There is fatigue that says we are continuing to review, we're continuing to attempt to update policies, we're continuing to attempt to bring it forward with our staff and with our people. On that point, Camilla, have you felt any of the regulatory changes, or indeed when you're looking to transpose some of them, have you felt maybe the pain of bringing those into the processes at your organization?
For sure, I think we all felt them, and I really like the expression that you mentioned, Aoife, the fatigue. I think that we are also suffering from project fatigue because you see new requirements, and then you have to implement them in your policies, stream them down to your procedures, and by the time that you have done that, then there is a different set of requirements. Furthermore, I believe that quite often the legislation is designed taking into account traditional banking. And sometimes that is not necessarily suitable for the world of fintechs.
Mhm.
So I think that there is this balance on how do you deal with like not over implementing and having a risk-based approach, and being able to have a dialogue with your regulator, saying, really, listen, I really understand my risk, but this requirement here that you set in stone is not designed for my industry.
Mhm. So the operationalization of the regulation in practice, putting it into the fintech industry is not maybe quite as straightforward as it could potentially be if
No.
it was designed with your industry in mind.
No, and I believe that a lot of things that we do in fintech, we're doing it for the first time.
Hmm.
So there isn't like, okay, you cannot look at, okay, how are they doing that? Where can we look for inspiration? Because perhaps in your country, with your specificities and your challenges, you're the first one to do that. So it's a whole new world, and quite often you're alone in that.
And Gianluca, I think you're probably well placed to offer support to all sectors of industry with these pieces. But maybe to touch on some of those points around the project fatigue and the fatigue of the change of regulation, is there ways that you have seen, or is there potential to alleviate some of that fatigue within organizations?
Yeah, let me say, before jumping, let's say going to the point you mentioned, probably one comment in addition. I see also that the shift in the authority could have a major impact, could be a major challenge. The fact that AMLA is going to come, even though it's still in progress.
We're not sure where it's going to be when it comes, but it
Yeah,
will come.
but will come, and this will probably harmonize whatever is already harmonized, but could be a little bit more consistent across the location. No, I mean, coming to the how to handle this, from my perspective, as I said, the key point is actually to, let's say, to address project looking at the very root cause of the problem. And as Camilla said, when a new problem is coming, which is the case of fintech, but also in banking and other sector, we see the same, because unfortunately the pace of both the money launderer and also the, let's say, the authority somehow, I mean, the investigation, it's higher than the regulation itself.
Mhm.
So I think that having a good anti-financial crime, program, it's in any case needed. And on the other side, combining also people from different skill set. So having people capable to manage different issues. For example, I don't know, technology issue, and also DNA so data analyst as well. Because as Camille and Ralph said, if you sit in front of a regulator, you should have a very in-depth understanding of what you did and what your group did. Otherwise, I mean, you are in front of somebody knowing yourself better than you. And that's a challenge.
So we're looking maybe to a world whereby the teams or the support that is wrapped around the anti-financial crime unit has actually expanded into that of data scientists, into that of technologists who can query the data. Ralph and Camilla, is that something that you would also agree with, that you see that the profile of people and the skill set that you are looking to is changing as we see this industry develop?
Totally agree. And I think it's, if you look at when we started 15, 20 years ago, we were a little bit this kind. Normally we were lawyers. Some of us with mathematic backgrounds, but moreover doing analysis. Yeah? And we were paid for that. So now if you look in terms of what is really needed after that first wave of transformation is people that have data scientists background that can read data and that can understand how risk scoring engines are working, what is data mapping, and so on. And we're competing suddenly against big companies like Google, Apple, etc., because they have the same need like us. Might not always that they pay better, but if I can put on my CV as a data scientist, Amazon or Apple, that might be better than Bill, for instance. Yeah. So that's a huge change, and from what we had before, and changing the investigator into a validator. And that last comment on that one is, I don't know how it's in Europe and worldwide, but we can see, for instance, Switzerland, that the education of compliance officers did not really follow that in the same speed as the market has changed. Meaning you're seeing only now for the first time data management skills or elements in the educational program, which has been indicated, data scientist part of the compliance education program. So there's still a lot of things to do to get them up to speed and to the next level. So in the moment, we have certainly a run on these kind of talents in the market, and we do not always win that run.
And would you agree in Denmark that you would see a similar profile? I'm sure you're hiring a little outside of Denmark too, Camilla, but would you agree that you would see the same need for a wider skill set, and maybe a skill set that, as Ralph mentioned, is moving away from that traditional, very strong analytics, but actually analytics of regulation, and maybe more onto the data side of things?
I completely agree with Rolf. When I started my career in Denmark, most of people in financial crime, either they were lawyers or economists, or they came from the previous branches. So, it was someone, again, former advisors and so on. And they were, as Rolf mentioned, investigators. Now we have a need of people who understand the data, who understand the technology, because you need to show the regulator, okay, my data is captured here and it taps into that. And also, when you're buying new technology and implementing new systems, imagine in a perfect world that your company has an unlimited budget to buy a new system. You need people who understand how that system can be implemented, how can it serve your company, and what are the limitations of that. How does this system talk to the other systems that you have? Because sometimes, the things are still going to be fragmented. So you really need to have that background. I'm a strong believer in diversity. So I believe that strong teams are made of diverse backgrounds and people who can talk to each other and share this knowledge. So I think there is still room for, the profiles that you saw before. We still need those people, but we also need people that come from a more IT driven background.
So maybe not looking for one person to be the ideal candidate. It's actually more to bring everyone together in the room. We have business talk to technology, technology talk to business, and everyone actually understand where they're coming from. I can see some questions have come in on the chat, which is wonderful. So we might take a pause and maybe answer, or maybe just get the panelists' thoughts on the first one. One would be, maybe, do we think that AI could help in optimizing the KYC processes? That probably leads into a wider conversation, which I think we will be having across the panel, to talk around how technology, both existing and emerging, can address the scale, the cost of doing KYC onboarding, the cost of doing KYC reviews, and the cost of the ongoing maintenance. So potentially maybe we'll address some of the panelists' thoughts around AI. I don't think we could have a webinar or a discussion without just speaking about AI at the moment. And then maybe we'll click into some of the wider technology pieces that we would like to have. Gianluca, is there any thoughts you'd like to share maybe on the AI process and what benefits or
Sure.
risks it might pose into the anti-financial crime area?
Sure. Now, let me say that, generally speaking, this whenever you go on the market saying that you have AI solution, you bring a lot of questions. I mean, not only a lot of questions, but a lot of meetings requests from each client. I mean, that's another topic today. So what I see is the fact, actually, we are scouting several AI solutions to be applied in the spectrum of anti-financial crime, not only on KYC, but also on other pieces of the process. What I see is the fact that, generally speaking, some of these solutions are very useful. For sure, there is, unfortunately, from a regulatory perspective, they are still a little bit skeptical about this AI solution and the fact that this, let's say, solution can totally substitute the human being. Mm-hmm. And therefore, you can never get to the auto closure of whatever. I mean, whatever task, it's a human being one. So that's probably the key challenge I see, even though I think that this cultural shift will in any case happen in the early future. And therefore, using and starting thinking about benefit, specifically the benefit of some of these solutions would be needed. At the moment, I see them more as a pointed solution for some specific tasks, and therefore to be really assessed in terms of business case according to your business. I mean, the number of cases and whatever. But if you have a good business case, I think that the financial institution should go for it, and then presenting to the regulator and supporting the market in building up the culture around that.
Yes, I'd agree. I think we definitely see a little bit of reluctance on the side of the regulator to place full reliance on an AI-driven process. I think they might want to see it tested and ensure the robustness of the technology before they would allow institutions to move on a completely automated piece, but we will go through it maybe in piecemeal. Ralph, is there any opinions that you would have in the area of AI, ChatGPT, some of the many tools that are emerging at pace, and maybe how you feel they could help within your organization or what you might be doing to assess their suitability?
I think everybody has already tried to put on your own name in ChatGPT to see what's out there, and sometimes you're surprised, like, wow, I didn't know that profile is coming out, or that I do this one. But I think in the perfect world, we would all believe that we give in the name of our customer, and then comes the perfect review exactly to our risk appetite, to the limits that we're setting out. So, and I think that's very important as one of the key words as well. You need to have a vision, meaning where you want to go. You need to have a foundation, a basis, what you have, and in terms of where you go. And sometimes we're always remaining on the path and never go to the destination. But that's our journey. For me, I think when you talk about artificial intelligence, yes, and honestly, there's a lot of hot words out there in terms of what is there. Where I totally agree is self-learning machines, meaning that, but because what you do not want to buy is a black box model, because the regulator or anybody else will ask you, but how can you confirm us that the result that you had, even for name screening, for instance, how is that okay, or for transaction monitoring, that this what you picked out as a scenario is really the good one? And sometimes I think that's our questioning as well. Do we really look into the right spot? That brings us always to the question, do we not use data tools as a sleeping pill or energetic drink? What I mean by that is, do you just have a tool in terms of having a tool and to say, I have it, but I never use it? Sometimes like me, when my daughter is telling me of what kind of apps you can use on the iPhone, it's nice to have an iPhone, but you do not take the full flavor out of it. Same goes, however, then for the self-learning machines, where you then always try to develop on something. So I would say artificial intelligence as a vision, yes. As a reality, we are in the moment are more over on what I see as well in Silvia's comments. We are more over on the robotization and self-learning element as a pre-step towards it, but the vision of AI, of course, persists.
and then we're moving to that. And Camilla, any thoughts on your industry? And I think being in the fintech industry, you are very much known to embrace new technologies very quickly as they emerge, but in your position, you still carry a lot of the risk, a lot of the compliance burden. So interested in your thoughts.
Yeah, I I believe that we need to be aware that these are tools, right? I mean, these are tools, and they will work to the measure that we set the parameters and that we have the vision, as Ralph mentioned, to use them for something, for an enhancement. But at the stage of development that we are, we also need to be careful. So you need to control that. You can certainly use this technology, for instance, machine learning, to optimize your models to be able to capture deviations of behavior in an easier way. That will free time from your advisors, and then they can dedicate more time to the proper investigation of these alerts. So I'm a deep believer in, we should use these tools carefully, because for me, these tools are there to free people from fastidious work that would take a lot of time, so that they can dedicate their time to value creation and value protection. And again, I think there's a lot of things there that we can use. I have seen, for instance, this AI that was helping when someone was doing transaction, like investigating suspicious activities. You can ask, to pull all the transactions for this, and so it will reduce the handling time for suspicious activity reporting by 1/3, and that would again free the resource, the employee, to perhaps do a more thorough analysis, look into other things. So for me, again, they're tools, and they're tools to help us to kind of use human time for the things that humans can perceive. So if my team has more time, then they can also take a call, and have a talk with an ultimately beneficial owner, and perhaps they will never have the real feeling if that person is or not really in control of that business if they don't talk to that person and ask, oh, but tell me about your daily operations and so on. And a machine cannot do that at the moment.
Yes, I certainly
I would like to really chip in on this element, because I think that the myth out there that digitalization, automatization, IA will lead to the replacement of humans in our compliance control function. It will not. I think the title of our webinar is very good, bridging, meaning, and you mentioned that, Camilla, already before, and bring the traditional market into the new digital market. And there is a bridging when it comes to compliance culture, etc. And I think we can then talk about why in the moment we are not where we are, even though that from a tool and data and infrastructure perspective, we could have really been very far already, much more longer in this way. And I think the answer to that is threefold. I think number one is budget, because can't just with 1,000 Swissies or US dollars achieve something. Needs resources and needs skills. And every transformation project, I guess a lot of people participating here have already gone through already in this moment. It's not a 3 months project. And Gianluca is very happy to certainly to help clients for 1 year and 1.5 years. I can tell you it's a very long journey, and you need to know where you go. And I come from a world where video cassettes were already or still there. And the question was, what's the best system? Meaning, is it better from Sony? Is it VHS, which finally won? Or is it Grundig 2000? And the answer, you never know. And I think the same is here. When we, as an end user, are choosing the system, we would like to choose a system which is sustainable. That's very often the problem. What is the best in the moment for my organization, and what's the best out there in the market? So it's very complex in terms of what kind of questions are arising. And so the final element is, I'm a big Simon Sinek fan. So the question is, why are you doing this? And come back to my initial statement, you need to have a vision where you want to go. Because when you don't have that, the why question, you can go wherever you want. You will be always on the journey, never direction, destination.
And I think maybe to address that, we've mentioned that this is a journey. This is something that maybe, quick wins can be identified, but it is something that would be incremental change over a period of time. So if we were to say, maybe, what do we think a visionary or a gold standard model would look like for KYC in the not too distant futures?
We have a wonderful here. Francisco is exactly working with us because he's asking about the perpetual KYC, and I think that was as well in your introduction, and we have all been a lot to these elements. I think that is the answer to it because it is one of the key points that will help us to get rid of this kind of perpetual review model, where you at the end of the year or half year time you're stressing the whole relationship managers because they get scared because they know that the dates are coming, and you think, yeah, I can wait 6-7 months until I do it. Whenever I have a case triggered or event triggered element, meaning a transaction, as Camilla mentioned it, where you could then put in more on a more holistic element in terms of, hey, what's about the KYC? What's about the kind of negative news that I have? Can I just rely on my name screening, or might it not be the occasion? When you have done that, then it's then automatically counted as a review model, and it goes away from this kind of population that you had in the past to handle on this, even sometimes a wave 1, wave 2 model. But it helps you a lot. And don't forget, I think today's time, especially KYC, is not only a regulatory element, it's an advantage for business. Same what you observe in Amazon, that bizarrely you buy an article and another article pops up that is exactly of your interest. Same is for KYC. A good updated KYC, number one, speeds up the process. So it's always my selling scheme to RMs. If you have your KYC in place, you get your decision much quicker. And honestly, today, especially in the wealth management market in Switzerland, it's the time to market which counts, because they know all the banks, the offering is nearly the same, but how can do it in the same kind of risk-based approach, of course, but the quickest. So I think perpetual KYC is one of the next steps towards. We are working, and I think a lot of other banks as well, to maintain resources and to make as well a resource planning more leaner than just hiring additional people at the end of the year to make a review model run.
I certainly think that the time to revenue and the client experience, if I were writing a business case for KYC change, I would certainly be putting those 2 points front and center to get the rest of the organization engaged. And Gianluca, when you're working with clients and you're looking to, again, that vision that they need to have for their KYC processes, you must see a lot of similarities across the different organizations that you work with. Where would you see are some of the common shared visions that I think we've identified quite a few already today, but where would you see those common shared visions and what would you feel they are?
Let me say, nowadays, the key topic that everybody's working on, as Ralph said, it's, let's say, dynamic CRR, perpetual KYC, how do you want to call it? That's for sure the hot topic today. But from my perspective, in terms of vision, what I see is the fact that big groups, or groups working on more than one location, are first of all thinking about optimizing data points, data lineage, data quality, and so on. Because what they have, it's sometimes they have a bunch of data spread around the organization in several geographies, which are not consistent among each other, and which refers to the same client sometimes, but they don't know it. They don't have a clear client view as well. So what I see in terms of vision on KYC is the fact that my clients nowadays are looking for technology which enable them to get a single client view, to get, let's say, a more robust and somehow also more appealing front end, because somehow the first line sometimes is working with very complex tools,
systems, we could say,
chaotic tools and so on. So, and therefore that's what I see. So the optimization in the front end combined with the optimization of the processes and so on. That's what I see, and that's what I think that it's something that the financial institutions should work on. Then for sure you can have something fancy you can add on, but that's backbone. If you don't have
some building blocks first.
Yeah,
we certainly agree that single client view can be quite transformative when in place, and being able to manage the data in one place. And Camilla, from the point of view of the fintechs, I think you're again quite uniquely positioned that in terms of a vision for you, you have to apply with the same regulations, where you've mentioned they're not always written to favor your processes. Where would you feel the fintech area will move in terms of KYC and compliance in the coming years?
In fintech, we move fast, right? And I believe that we'll be moving faster.
I think we're
and
just having a little problem with your microphone, Camilla. If you can go slightly closer.
Can you hear me now?
We can, yes.
Okay. Fintechs are traditionally first movers. And I believe that fintechs will be adopting more and more technology to ensure what we call perpetual KYC, which it's the word of the year, right? Perpetual KYC and how to ensure that. The way that I see perpetual KYC is the way that I see, it's a relationship. You need to know how this relationship is going and how this relationship changes. This is about managing your customer and your customer relationship. So we're talking not only about the technology, which fintechs will adopt in order to look at the patterns and have better data visualization too, because I think this is very important. Sometimes we are working with 3 different systems and an Excel spreadsheet, and it's very hard to visualize that. And I believe that this is the way, that this is the effort that fintechs are doing also to inform management, being able to inform management and to translate that to management. On the other hand, it's also really important to establish a good dialogue with the customer and make them understand why we're doing that. So when you tell me that your transaction pattern is going to be X and you just put a round amount because you don't care, you don't want to think about it, that means that I'm going to tailor my transaction monitoring system to that. So when it exceeds X, I'm going to be bothering you. So I think this is really important that we explain the customer, why do we need them to think a bit about the data that they provide to us, so that then we can use that in our tools for that. And again, I believe that data visualization is quite important so that we can convince management to take some strategic decisions and advocate for financial crime. For instance, sometimes you might think that one type of financial crime is what you're more exposed to. But once you get the data that comes from these tools and you're able to show that to management, you can actually drive the investment in other areas that are high risk exposures, and perhaps they were overlooked before.
And maybe that's a good piece for us to move towards for final comments. A big piece for this is anyone undergoing or beginning their digital transformation journey. There is a long road on reviewing vendors, looking to potential building things internally. But if we were to give some advice to maybe fellow participants today in terms of what would be some of the key items that we would need to have in our business cases that you mentioned, Camilla, to get senior stakeholders on board with the proposals, and then maybe to complement it, is there any advice that we would give when selecting vendors or reviewing vendors in the space? So maybe Ralph, some comments for you on that piece.
I went through not always painful, but sometimes painful if you see the result in terms of meeting and greeting vendors and sit together for them for 1-2 hours in terms of getting through it. But it's number one, as I mentioned before, you need to have a vision in terms of where you go, and you need to have a budget as well to understand what you can buy. Is it a Ferrari or is it a Volkswagen? That as well, and it should be accustomed to what you need. So it's nice to go around having a coffee with one of your colleagues from Goldman Sachs, but they will certainly need a different model if you have a smaller boutique private bank, for instance, with what I see from an unknown attendee here with 20 people. So there is not the all fit all solution. What I can tell you is that there are a lot of fintechs out there, but a lot of fintechs are developing outside our needs, what we really need. They are absolutely into super technology elements, but they are not really resolving all our elements. So I think it needs a lot of discipline to take that on, as Camilla mentioned as well. It's a multi-stakeholder element. It's not a compliance tool per se, meaning it has first line business risk management and second line and sometimes third line of defense involvement into it. So preparation and involving all stakeholders is very important. Don't get me wrong, it's not Christmas time, meaning that everybody can, for the RFP, put the question list, what they have and what they would like to have. You need to pull it really lean down. And what we have went through is we took a vendor solution, which number one is very agile, meaning you start with seeing something very early in the process. Because the most frustrating element is if you go for projects with a timetable of 3 years, and the outcome and the benefits and the efficiencies are not already visible after 6 months. And even if it's only smaller things, like automatization in terms of form generator, that the RM doesn't have to collect from the library manually all the documents, but boom, he tips in what the client comes for, where he is located, and boom, he has already the setup together, or it's already pre-filled templates. Sounds in 2023 as something out of the past, but honestly, in some cases, still the case. So you need to look for quick or low-hanging fruits and quick wins in the process, I think. And last but not least, you need to report on the where you are, what are the problems, and what are as well the gains in the highest committees whenever that is possible, because you need to buy in. And sometimes even the CEO needs to put a hand on the table by saying, guys, that's the way we go, and don't get disturbed on that one. That would be my 3 advices for anybody who wants to start.
And Camilla, would you find that a similar path to approval would be what you would follow when selecting a vendor or something to run through the change management process?
Yeah, so we have recently been involved. It's the same as Ralph mentioned. We talk to a lot of different vendors. You cannot find the right vendor if you don't know what you want and where you're navigating. And I'm going to give you an example that is not related to KYC. So many African countries were buying military technology from Brazil. Now, Brazil, you don't think that Brazil is really particularly good at military technology. Why are they not buying from Europe, from the US? Because the technology that the European countries or US were developing were not suitable for their terrain and their weather. So sometimes, you're not going to drive a Porsche in a country road. You might, but I don't advise that. So you need to know your terrain, because buying a very expensive system might not solve your specific needs. So map what are your needs and prioritize them, because most likely the solution is not going to be able to solve everything that you need. So please prioritize, and management has to be involved in that. Now, when you're looking and talking to your vendors, you need IT in these discussions, because a lot of vendors might have amazing features that you're not going to be able to integrate into your specific systems, or that your IT already has like their timeline completely packed and they're not going to be able to devote time for that. So you really need to look into that. You need to look into the user experience. Sometimes less is more. Sometimes the system has a lot of features, but is your team going to be able to use all those features? Does it make sense? Always talk to other customers from this vendor. Ask to talk to them, to ask what was their experience with the vendor, because sometimes they promise one thing, the other one is delivered. And finally, ask for tryouts. Try out the system. You really need to take time to go there and take and get your team and get other people with different profiles than yours, because you are going to be committing for a long time to the system. It's a marriage. You're going to be together. You need to know what you're buying into and what kind of assistance you have, what kind of customer support you have. And again, a lot of people tell me, well, the systems are so expensive. I'm a small company. Well, you can actually prioritize what is that you want and look for some solutions that are more accessible. Go talk to them, negotiate, because sometimes you can do a partnership, that you're going to help with development or something. Sometimes they're interested in having you as a client, and you can negotiate a discount for that. And finally, know your company profile and manage stakeholder expectation. As Rolf said, if you're promising, quick wins in 6 months, you have to deliver that. Now, sometimes when you are in a big bank, you have governance processes. You have a steerco and then a committee and another, and you're not going to be able to deliver that, not because of your willingness, but because of the processes that you have to abide to. So map this out so that you have clear expectations on the way that you're going.
That was an incredibly thorough answer, Camilla, but thank you. I think you touched on many, many parts that would be very pertinent for anyone looking to consider some technology. Maybe, Gianluca, for some final comments from you, if we look into the position where we've selected our technology, we have begun our journey, when we're in the implementation cycle and from your work with clients, is there any tips or any advice that you would share in terms of how to make that implementation process as seamless as possible?
Yeah. No, thank you very much for that. Let's say the system implementation is always a painful journey, unfortunately, and sometimes you during, let's say, the vendor selection phase, you have a very fancy feature that you think that are what you need and so on, and then you discover that either they are for an additional cost or they are not exactly as they were sold. So I think that the first key point is to define clearly what are the business requirements. So what are the expectations from all the stakeholders, first line, second line, and whatever, putting them in writing and going to the several approvals that are needed. I know that this journey will take a while, and sometimes the business design, let's say the designing of the process that of the new tool is something that is always stretched to the lowest possible. But unfortunately, that's needed because that's the only way that you can get a proper commitment and understanding from all the parties involved. So that's probably the main tip. And then monitor whatever is going on. And that's it. At the end of the day, with a fair approach, what is important is the fact that sometimes people think that vendor are cheating on them, or the vendor thinks that the client is asking more than expected. No, it's a fair game. You are just partnering together, and if you fail, it's on both sides.
Yeah, in addition to that, I love what you say, because it's I think Camilla brought the term of marriage up, because that's right. Huh? You do not buy just the thing that you buy a car. The whole maintenance is in it. And one really important comment for everybody who's listening who wants to do it is, if you buy a printer, the most expensive element is the toner. It's not the printer. Meaning you need to look out that your vendor gives you the opportunity to change easily in the system and making adjustments. Give you an example, country risk is changing. You do not want to get out to the vendor in terms of getting 2 main day of working so that they change one country to a high risk country if you can do this on your own in the system. So you need to have flexibility and agility in the system to have on the rule setting as maximum input as you can, because then if not, you get dependent on the vendor. So I think, as we mentioned in the beginning, trust is an important element. And of course, and that goes for Gianluca's activity and brand, moreover, you should have reliable partners. It's nice to have fintechs that are there for 1 year. Are they still out there in 5 years? I always give the nice example of I love my Garmin watch, but Garmin wasn't in the fit health branch at all. They came from GPS. And so I think some of us had Sony Ericsson telephones still when they're existing. Or what was the leading brand? Sorry that I'm doing here a little bit of this one. Nokia. Nokia is not existing anymore. So I think whenever you do a selection, you should as well have a look in terms of the experience, how long these people are in the market, and like a BCP, a business continuity planning, what happens with the data when everything is breaking down, getting bankrupt? Can I use it? And can I easily use it in terms of finding a plan B? That's the last famous word on this one.
Wonderful. Well, I think we're just running a little over time, so I will thank the panelists for their input today. A very interesting discussion. A final thought for me, maybe for anyone who is embarking on a KYC transformation or a perpetual KYC piece, I think we have highlighted today that it is definitely a journey, but I think the value that people would get from as the title of the webinar would suggest, from bridging the technology gap, it does bring benefits to an organization. And maybe as a closing point, what I think the panelists would agree is to celebrate the small wins. When you see some benefits, when you see that your first go live drop has happened and users are in the system and in the application, make sure that that is celebrated, because this journey can take quite some time to get the full realization of the vision, and to keep people on board, a little celebration every now and again will go a long way. So thank you for your participation this morning. Thank you to everyone online for the questions and the input that they've had. And I think we'll wrap for there today. Thank you very much, everyone.
Thank you.
Thank you. Have a good day.
Thank you.